Hello, everybody. Welcome back to another episode of the Loan Officer Wealth Podcast. We are here with Jeff Weller. Jeff, welcome to the call.
Thank you. Glad you had me.
Awesome. Well, you have been absolutely crushing it this year. And I know there's a lot of people in the mortgage industry that have got a little bit of a negative mindset going on right now. So I'm really looking forward to our conversation.
Yeah, that's definitely true. There's a lot of people with a negative mindset nowadays. But anyway, I don't want to take away from your questions.
Well, tell me about Coast to Coast Mortgage first. How did you guys grow? It's a phenomenal organization. You guys are doing amazing things. Can you tell me a little bit about the story of how you grew that?
Yeah, we actually bought my coworker, our co-owner, Vern Vorst, and I bought Coast to Coast back in 2015. And at the time, I think it had 4 loan officers, and we grew it to about 60, 65 loan officers. And then just this past year, Vern decided, hey, I'm ready to retire. I want to sell the company, sell my portion. And the ironic thing is the guy who we bought Coast to Coast from in 2015 said, hey, you know what? I want to come back. So
No
he bought
way.
in, Keith Richardson. Yeah, so he bought in. And the cool thing was he had his own company at the time, so we kind of merged them together, and he had about 50 or 60 loan officers. And, he was a lot more organized by having, specifically a payroll person, specifically an IT person. We had a compliance manager, so we just kind of merged all these things together. And so we're a small company with a feel of the small company, but we've got a lot of the big company items that you need, like a compliance manager and an IT specialist and things of that nature.
That is amazing. The best of both worlds. And positions you guys perfectly for some incredible growth.
Yes, absolutely. We're hoping to we're hoping to double in size again by the end of next year.
That is incredible. So I know we have a number of listeners that are very interested in recruitment, and we have a whole bunch of listeners that are interested in how you're bringing new business in the door. So let's start with the recruitment conversation first. So that is just
Okay.
incredible growth of attracting loan officers to the brand. What are you doing for recruitment? What's kind of like how are you recruiting people into the organization?
Well, right now, Keith is responsible for most of the recruiting. And so he pretty much acts as a full-time recruiter, outside of his other responsibilities. I mean, the majority of what he does is a recruiter, just kind of like the majority of what I do is a loan officer, even though I'm a company owner and I still have company responsibilities. But Keith is just really good with finding people. And, I think a lot of the recruits that we have, probably the majority of the recruits we have, come from referrals from other loan officers on our team. They'll
Huh.
know somebody and they're not happy where they're at, and they're like, "Oh my God, it's so awesome here! Come over here." And so they'll tell them all the great stuff, and then when Keith or I talk to them, it's very easy because all we're going over at that point is learning about the loan officer and if it's a good fit, and then going over compensation and things of that nature.
Yep. That's so funny. It's like when a Google lead calls in or you get a realtor referral. It's like they're 90% of the way closed because they've already heard about you, they've researched you, they've read the reviews. It's just easy to close that business. So that's amazing. What would you say, because the market has shifted so dramatically, what would you say are the 3 things that loan officers are looking for today in a brand where they're going to align themselves?
Well, the 3 things that I think that a loan officer would be looking for today, number one is pricing, because there's a lot of companies priced out of the market, and it's a lot harder to sell if you're priced over market pricing. The second thing would probably be support. You want to have a team that can back you up if you need help. And if you're a real small broker, you just maybe have one person that can help you, the broker owner. If you're a real big company, then sometimes you don't know who to go to. And
Yep.
so we try to make it apparent to everybody who does what roles, who can answer your scenario desk, who can answer your underwriting questions, who can answer your payroll questions. Oh, my hard drive failed. What do I do? This guy can help you with the IT side of things, So or help you with the marketing. And so we try to have all of these people right easily at your fingertips, and then we have an inter-office messaging system, so we can just instantly talk to somebody without having to pick up the phone and call them, which is very, very helpful.
That's amazing. And I think you nailed it. I mean, support and allowing the loan officer to do what I believe is the primary job, which is out there on the phones, talking to borrowers and talking to referral partners. That's the main job. You need support for all
Right.
the other roles.
Right. And then the third point, you mentioned 3 points. I'd say the third point is compensation.
Yeah.
I've seen a lot of companies out there that have very low splits, 60-40, 50-50, or whatever. If you notice the bigger companies, they typically have a very high split or a flat fee per loan. And that's what we went with. We're the flat fee per loan. And so if somebody coming on board can close loans for, $9.95 per loan, and they get the lion's share of the commission, everything else is theirs. And so that's the beauty of it. They can really handle their, when I was talking to a guy recently, he closes about $2 million a month, and he was on a 60-40 split. I was looking at it and I was like, oh my God, look at how much money you're leaving on the table. We did the math on a $500,000 loan. It's almost a $13,000 commission, and he's given up about $4,000 of that, and with us he would give up $9.95. So it's another benefit. You have great compensation, you have great support, and you have great rates because you pretty much set your own rates. You have access as broker pricing. So you have the best rates in the industry. We have 215 lenders. So you've got pretty much everybody you can imagine to do a loan with, including commercial and hard money and even private money lenders.
Yep, absolutely. Now, one thing I hear in the broker space all the time is product knowledge is just paramount to being able to find the business and find the transactions. Do you guys have a tool that you use or something that you have in the organization to help find those deals or products?
Well,
I should say?
okay, so that's kind of one of my responsibilities is finding lenders that have niches and have products. And the cool thing is our lender list has niches on it. You can search on our lender list by niche. Like if you needed to search for lenders that you're looking for an I-10 loan or foreign national loan or a no income or no credit score loan, you literally can type that on our lender list and it'll pop up and show you all the lenders that have that program. And then you can just reach out to each of those lenders, get pricing and whatnot. I'm pretty much a scenario desk also. A lot of people reach out to me and say, hey, I got this weird one, or hey, I got this 400 unit apartment complex. What can I do with this? And I'm like, okay, here's what you got to do. And so we've got that background as well because I've done commercial. I do commercial now. Most of my lending is investment lending, so it's a little bit of a different niche than most people.
So Jeff, that's super valuable.
And we also do. The reason why our call today was at 12 o'clock is because we have a lender spotlight call every Thursday, and we'll have a couple of lenders that come on board and tell us their niches, but not only their niches and what they do, but how you can implement their strategies into your marketing.
That's awesome. And that's one of the things that I love most, because when you get into marketing and advertising, it's about giving the right message to the right market. And if you're just talking to everybody, it's so difficult in today's market to just be like, I'm a mortgage lender, I help everybody. But when you can get down into those niches, it's very easy to find a lot of customers in a local marketplace because you know exactly who you're going after, where to find them, and how to give them the right offer.
I agree. There's so many good niches that somebody can get into, whether it's investment lending or DSCR lending, or maybe it's specializing in first-time home buyers with down payment assistance. There's so many different niches you can go through. Reverse mortgages, for example. But if you target that audience, before I thought you had to do everything. I thought you had to do conventional, you had to do reverse, you had to do commercial, you had to do everything in order to make a big paycheck. But when I switched to investment lending about 3 years ago, I realized, I still get a conventional purchase that falls on my lap every once in a while from one of my agents, but for the most part, my business is totally that niche of investors, and they just keep coming back.
Yeah, that's so. I understand. That is incredible. Congratulations. But I hear so many of our listeners that are just terrified to make that jump. Like, what if we always have that, mind running in the background? So can you take me back 3 years ago to where you were and how you made the decision to niche down, and then what that process has looked like in your career from that point forward?
So I was mostly doing conventional FHA, VA, the typical types of loans, USDA, forever. That's all I did until about 2020. I would do a few investment loans, but nothing on a major scale. But into 2019 and going into 2020, I started investing more myself. I'm an investor with, I have a lot of doors, about 150 doors. And
That's
so,
awesome.
thank you. So I figured, well, hey, if I'm buying all these investment properties myself, I'm hearing all these people talking about how they had this loan with this lender and it's not going through or something like that. Or they've got it, but the rate's 11%. They're coming out of hard money to 12%. What do I do? So I just networked. I started going to networking events, and sponsored the local real estate investor association. It's like $400 a year. You got a table and a booth, and you can talk to hundreds of people as they come in on a monthly basis. And so that was a great way of getting in. But just diving in. I mean, it is what it is. I mean, it doesn't mean you have to give up doing a conventional loan or a VA loan. I mean, yes, today I still get those. I still close a handful of those. It's just the lion's share come from the investor side. And at the investor side of things, there's DSCR, which is the debt service coverage ratio. A lot of loan officers probably know what that is.
Yep.
But there's so many versions of DSCR. There's below 1 ratio. There's below 0.75 ratio. There's no ratio. There's Airbnb short-term rental products, which is a whole different niche all on its own. I mean, somebody could make a great living just doing Airbnb loans, if they're connected with the right lenders. And so I try to take all of that because I have Airbnbs. I've got long-term rentals. I've got pad split is like the new craze. Everybody's going for pad split now. That's a rent by the room situation, and very few lenders want to do those loans.
Yep.
So we've kind of worked with a couple of different investors and came up with products for that specifically to bring to the market so that we can service these clients. So we try to follow the way the market is going, and it seems like starting in 2020, the majority of the buyers locally in the city I live in, Jacksonville, Florida, 25% of all transactions were to an LLC.
Huh.
And so it's like,
Whoa.
wow, 1/4 of all transactions are to an LLC. Now, that doesn't necessarily mean BlackRock or State Street, but it could be mom and pop's LLC and they own 3 houses in that LLC. So when I saw those numbers that 25% of all purchases in Jacksonville were to an LLC, I was like, look, I can take 25% of this market here. If I just gather 2 or 3% of that 25%, that's a huge amount of loans.
Yep.
And so that's why I targeted that. And I don't know, every market's different as far as, investment lending. If you're in California, it might be tougher to do because the prices are so high. But, you can pick up other states. I mean, we're licensed in 30 plus states, D.C., the Virgin Islands, we're licensed all over the place, and we're adding more as we go. But I find the biggest number of investment clients are coming from Florida, Georgia, and Texas right now.
Oh, wow. That's absolutely incredible. And I just love getting into the niche. So you started with networking events. I'm assuming a lot of the business is still coming from that, but then also leveraging into, okay, now you're known as the guy who can get those types of loans done, and you're getting more referrals from the database. Is that right?
Yes. In fact, I do a lot of podcasts. Seems like I'm on one a month. And I actually teach classes for the local real estate investor association, Jax RIA. I taught one Monday night on acquisition and investment financing. And so, I do, coursework. There was 30, 40 people there that was looking to do their first flip. And so, obviously, we can help you with that flip loan. Then we can help you put it into that permanent financing. So there's multiple levels when you're dealing with investors that you can do more than one transaction on one house within a year.
Yep.
And that's different from conventional lending. With conventional lending, you got that buyer, they buy one house and they may not buy another one or refinance for 4 or 5 years. You got to go find another one. But with investment lending, you have one client. They might buy 3 houses this year that they need fix and flip loans on, right? Then they need to refinance all 3 of those. Now you got 6 loans out of that one client. And if you're doing 6 loans for one client in 1 year, then they're going to refer you 2 or 3 of their friends, and they're going to be like, oh, this guy's great. There was a podcast the same night I was doing the class on Monday night. Tuesday. Tuesday, this is like my schedule. Like Tuesday, I went to a networking meeting at 11 o'clock at a local restaurant. And it was actually started by a guy named Glenn Friedman. He's a great guy. He actually works on our team as a loan officer. And but he's an investor too. And so he started, him and one other person started this event. And we have about 100 people that show up, every month for this event. And they all, I swear, I feel like I've done loans from like almost all of the people that show up on a regular basis. But they all know who I am. And one time this is kind of funny. There's another larger broker shop in town. I'm not saying any names, but they had a person come in, and this individual, very knowledgeable of the industry, and this person's job is to make the phone ring for the company, bring in business. And at this specific meeting, everybody gets to stand up and say who they are, what they do, and what they need help with.
Mm-hmm.
And so I got up and I talked about coast to coast, and we help with investment lending, fix and flip lending, getting you out of hard money, that kind of stuff. And this lady went right after me, and she stood up and she said, I can do everything he can do, but better.
Oy.
And I was like, wow, okay. So what was funny about that was it was not one, not two, 11 other members in that group that spoke after her said, and Jeff Weller's your guy. And I've done loans with Jeff Weller, and he's my go-to guy. It was 11 people. I counted them. I was blown away that my customers were actually standing up for me because this person ripped, like basically took a shot at me.
Yeah.
And then basically when the meeting was over, I just started like walk right out. She didn't stop and talk to anybody. She just left because I think she realized that she made a mistake. She shouldn't have done that. And because everybody was defending me because they've all worked with me multiple times. So, yeah, so that's just, but anyway, so to continue my story, talking about my schedule. So like Tuesday, I went to that meeting again. That woman hasn't been back. That was 6 months ago. But then Tuesday night, Tuesday night I taught that course. So Tuesday was a long day. I didn't get home till like 10:30. But also something else that happened was there was a podcast last night or Tuesday night that the Cash Geeks do, and they're a local wholesaler. They flip hundreds of houses each year. They sell them, they rehab them, they do all kinds of stuff. And one of the people they had on there was one of my clients, and he's got like 65 rental properties.
Wow.
And I just closed a loan for him like a week ago that was like impossible to close. I don't want to tell you why on a podcast, but we got it closed. And it would take too long to explain. But the funny thing was I was listening to their podcast just this morning because I didn't have time Tuesday to listen to it. And they actually brought up my name and spoke about me for 8 minutes out of their 1 hour podcast.
That's amazing.
I'm on there for 8 minutes. They're talking about me for 8 minutes, my client and then the host, and both of them have done business with me. So
wow.
That's, so it's just nice having your name out there. And the more involved you are with your local community, the more people you shake hands with, the more they see you again and again and again, they keep reaching out to you. And with investment lending, they keep coming back. I mean, last year I have 2 clients. One client, I did 24 loans for him last year. Another client, I did 17 loans for him last year. When I say last year, I mean the last 12 months.
Right.
Not like 2022. And that's just 2 of my clients. There's plenty of clients that I've done 3 loans, 5 loans, 10 loans. But the majority of them are typically 3 to 5 loans at this point that I've done for them. And but they just keep coming back. Rates are rates, and investors, they know rates suck when they're 8%. That's fine, but they're coming out of 12%. So right. 8% sounds better than 12. They got this private money fix and flip loan at 12%, and they're used to paying a couple points.
Yep.
So it's a pretty easy sell. You're getting them out of something that's far worse. That's a balloon that's going to expire in 12 months or 6 months, and you're putting them into something stable that's 30-year fixed, and then you can make a decent living on it, and you're really helping them.
Yeah, and I mean, what a great business to be in. And just like you said at the beginning of the podcast, when you know your product and you know your niche, it doesn't necessarily have to be investments or fixes and flips. Like, you can do this with reverse. You can do this with your industry and your niche, because when you niche down on a product, it allows you to become that person in that industry. And as you do incredible business. You treat people right. You make sure everybody's well taken care of. And that's your bank account for life.
Absolutely. And everybody that I know that does a niche like reverse lending, for example, or whatever their niche is, one person does jumbo specifically, they're all at the top of their game. They're all like top loan officers in their area. We have a young lady in Key West, and she's constantly closing, $4 or $5 million a month in loans. And the thing is most of these loans are $3 million houses that she's getting a $600,000 loan on because they're putting, $2.4 million down. And so, but being able to network with those individuals is a whole different mindset. It's a whole different personality to go and network with them. And I know she goes out and sponsors events on with boats, and there's some race that's $10,000 a year to sponsor it, and she sponsors it every year. And so there's again another niche. Jumbo lending is specifically a niche, and she's in Key West. I mean, everything's jumbo there. You can't buy a condo there for not being a jumbo loan.
Yep.
So just pick a niche. Anybody that focuses on a niche, niches make riches, and it's very true.
That is so true. Jeff, thank you so much for being so generous with your time and your knowledge here today. I'm sure we're going to get a lot of questions about, like, where do people find out more about you, the business? How do people reach out?
Well, probably the easiest way would be to email me. So they could email me at jeff@coastml.com, jeff@coasttocoastml.com. My office number, I have a receptionist that answers if I'm not available, and she can put you on the calendar. But my office number is 904-500-5626, and that actually stands for loan. So it's 904-500-LOAN. And
Nice.
so you can reach me there. And then, of course, we have plenty of websites that you can go to, but coast-to-coastmortgage.com, you can click on my name and get all my contact details there.
That is amazing. Jeff, we will have all of that in the show notes below the episode. Thank you again for being on, and congratulations on the incredible success. Very well deserved.
Thank you so much. I appreciate you. And thank you very much for having me on the show.